Everyone. Welcome to your daily update for BTC, SOL, and crypto market cap, and all the other bits and bobs. So let's start with liquidity. We closed the New York market, which was rather boring, and went straight into a complete whale dump. So, in case you don't know, the time in between markets, and particularly if you get weekends in between market hours, and even more so if you get a public holiday or a banking holiday in between market hours, are the lowest liquidity times for order books. So if you're going to start throwing price around, liquidate people, it costs the least to buy the price up, and you have to sell the least to sell the price down. Um, so yeah, if you're ever wondering why they stop these markets and then things just magically fall off a cliff, it is because that is the best time to do it, and that's what you're seeing right now. So how is that affecting liquidity? Well, it's pretty much wiped out the daily liquidity on SOL. There's still a drive probably to go down to like 108, 108.3, 108.4 sort of price point on BTC. If we look at the 7-day liquidity, it's taken a pretty good hit on BTC, but you've still got that 108 level. SOL, the liquidity has been given a bit of a punish, but you could definitely see them pushing to 182 or down into those 170s still. There's still stuff down there to grab. And obviously it would make sense for them to spike back up to 202 to take out the longs that have been chasing take out the shorts that have been chasing the dump. Let's have a look at 30-day. By the time you guys watch this video, this stuff could have already played out too, because it's looking pretty brutal. Like they want to get it all over and done with between markets. So 30-day liquidity is nearly drained on BTC. So again, 108 sort of levels. We have got a lot of lower targets for BTC, but it just doesn't seem to make sense from a liquidity perspective to try and take the price there, because to bring the price down, what you want to do is you want to liquidate people, and you want to do it in such a fashion that their cascading liquidations brings the price down in the order book. So you liquidate one person, their market sell dips the price because of the low liquidity in the book, and then you hit the next liquidation and the next liquidation and the next liquidation. So that's why you see the liquidity get built up and get really dense over a wider area, so that when they start the cascading effect, they only have to sell a little bit, and then everybody else's stop losses and thin order books do all the rest, and they take it down to a low price, at which point there's no buy orders there, and people are scared, and then the whales reaccumulate. So at this stage, it doesn't look like they really would want to drive it much down further without at least having some upside bounce to bring more longs in. So, but if they do an upside bounce and they wanted to take everything on BTC, it could well be up to 120. But most of the structure has rejections starting around 115 to 117. So I don't know if they'd go all the way to 120. As far as SOL goes, yes, they could drive it down further, but there's a bit of a gap there, really, in liquidity between that sort of 180-ish level, kind of like where it is now, or even sort of a bit of a gap down to 176, where it really starts again. So it would probably make sense to push it up a little bit first. That fills the gap because everyone goes, cool, we're bouncing, and then bring it down again, right? So then that's the view of liquidity from that direction. Let's have a look and see what it looks like. As you can see, it looks very brutal, particularly for SOL. They've just taken out everything, and we haven't had on the short term anyway, and they're left with that big gap. So even if you look at the long-term liquidity, it's just in the middle of a ginormous gap at the moment. So if they wanted to touch to the upside, and more or less start to sell a position into whatever's up here, they really have to go to 196 or higher. 196 to 202 to take out the high leverage would make sense. BTC should be structurally bouncing about now. There is some time frames which have hold levels sitting at about 109. So I sent a tweet out earlier just saying that I'm really looking for 108, but I'm going to start laddering in now because there might be a little bit of an inducement bounce, which is sort of what we're seeing here now. So, so that's bouncing up. It might go 110, 111 maybe, but I don't know if that's the bottom because they've left this liquidity really between 109,227 and all the way down to the 105s. But likewise, I also don't think they might. I don't know whether they'll go that low yet. But yeah, be prepared. There are really legit targets that can take BTC sub 100k. The more time they spend down here at these levels, the more likely those are to play out. But now it looks like by the time you watch this, we might have already had our little bounce. Okay, so let's jump through and have a look at some charts. So we closed up over, great area to close, but we didn't hard close, and this is why hard closes are so important, because as you can see, we then on a rejection rampage. Now, we've come back down to the break level on BTC Strength, which is around that 170 sort of area, and really you want to see, these are all hard close break levels, and the trend is down at about 16688. So you really want to see this pull back up over those break levels before close, and it's got 2 hours to do it. In this time too, if they want to get people to capitulate, then they'll drag it out a bit, I think, and stay down a bit longer. If this actually goes back up and closes over that trend, that's really bullish, to be honest, because even if it doesn't close in accumulation, if the bungee cord has been attached to this candle and it drags it back up in the next 2 hours, that means that that trend is kind of already there. You could imply that it is already support. And of course, if it closes in accumulation, well, then it is support, and off it goes. But it's a great place, even though you see this dive, because realistically, the dive is a liquidity sweep. The fact that it's been done fast and hard in between markets means they want to sell less of the assets they have on hand, which means they value the assets. So it's a good thing, even though it looks pretty nasty at the time, right? Let's have a look at our dominance. We talked about this yesterday. No hard close, deviation, off support, back up above the range trend, retesting the upper levels, retesting the trend. So this could. It is actually a 3-day close today, so this could get back up over that 3-day trend, and we could see a further push up. So ideally, you don't want this hard closing a 3-day candle over the trend. We want to keep dominance below 65% if we can, and then allow it to continue to push down. But realistically, it's also normal, totally normal, for price to bounce a trend and move to a hold. That is just typical. So yeah, that's what you're kind of looking for when you're trying to say, hey, we're going to have a reversal today. Well, if dominance is bouncing a trend and it has a hold level or target, and other things are pushing into resistance at the same time, well, yeah, you're probably going to have a reversal that day. So let's have a look at total, and total dumped down and hit the origin support level of the range, which was down here at 340, and it's bounced off that. Okay, so that's good. There's nothing bad about that total chart as it currently stands. I mean, it kind of dived from the other side of trends, so that says we might get a bit of a relief rally. Okay, and now Bitcoin. Okie dokie. Right, so this is a really big trend dive. So it doesn't move the trend, but so yesterday what I said was we've had a backside bounce. They're not usually sustainable bounces. They're for scalps, and the price usually will go lower. So that was that. It came down. It hit that 110 area. Every influencer was like, buy, 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 buy. A little stupid alien on the internet was saying, nah, it's not a sustainable bounce. So you scalp these bounces. They are fast trades. They are great trades. You just buy them, you run them up, you TP them. but you don't expect to hold them because what you see now is what happens. So we have not really hit the front side level, if you ask me. I think we got pretty close. That front side candle, whether that's enough. There are other time frames in play, but this is sort of why I started laddering in, because I felt that we were probably going to get a bounce anyway. So when this candle closes today, if it closes down where it is, it's probably going to look to retest the backside of something, which could. I mean, the absolute most bearish thing is that it retests the inverse of the previous candle, which is 110,500, and then it rejects off that and dumps. It's kind of like just filling a fair value gap, that hasn't really been created yet, but will be created. Or the backside of whatever range that is up there, which isn't a daily range, it'll be something smaller, and that's up around 111.6, I think. Yeah, about 111.6. So that'd be pretty good. And then you've got the retest of the opposite side of the older break level. So anything past there is pretty good. And then it could go up to retest the lower time frame origin level that would exist inside there, which is about 112. And of course, it can always go back to the trend. And that's long term, its obligation will be to go back to the trend because it's dived it, but it may do it in sort of a accumulation shape. So instead of just going straight back up, it may sort of go down, accumulate in the front side range, and then come back up, which is more likely, in my opinion, that it would do that. Okay, so let's have a look at, so still thinking, we might get some bouncing around in here, but it'd be really, really reassuring to at least see that 108,350 level there, which we haven't seen just yet. Now, there's the 2-day chart, same thing. So this is the one I posted all over the place yesterday. We had our bounce, which was effectively this backside level, which was a break level retest from the candle there. So that was our 110.6 sort of price point. It went back up to trend, which is what it's designed to do. And now we've got this candle down under trend. So this has one more day to not break that trend. And so if it closes down here in distribution, this support trend will shift to the bottom of the candle. And then it depends on what the wick is like. So if the wick is a short wick and it opens on the wrong side of that, then it'll go down. And we'll cover this off tomorrow because obviously there'll be more time on the candle by then, and we'll be clear as to what it's doing. But if it closes like it is now, even if it just accumulates like this for another day, it'll then bounce off the newly positioned trend and it will come up and target the hold here at 114. So that's, which would have rough confluence with the downtrend. So now the 2 days just doing what it should be doing. 3-day, and the 3-day is creating a hold level at 112.821, and it's also going to be below a break level at 111.865. So, well, it's also supported by the range trend too, which is what it's bouncing off. So what this is telling us is that if we get into some form of temporary bounce off these levels that are in play at the moment, you'd probably want to be TPing based on the 3-day close today. Probably going to want to TP them at 111.631 or 111.865, and then up into the hold level there at or that really old trend maybe, but up into the hold level there at 112.821. But all the same thing is what we said about the rejections that have just happened. This is not a hard close. It can be a deviation, so it's gone down below. It could recover all those levels and get back above, but you are sort of at that point asking it to recover a trend, like the backside of an uptrend. You're asking it to recover, which is generally not that hard, but you're asking it to recover a downtrend, which would be hard. kind of need to have hit a proper hold level to actually break a downtrend, and haven't. So we've hit a range trend. So yeah, this is probably not going to go up past that in straight away without some downside first, but it may bounce to that. So yeah, any of those scalps that you're in, they could be good targets. And if we go down further, then you get your more greedy entries, and then you target that. So it's looking pretty good. And we have hit the front side. So this is the front side of the 4-day. And this doesn't close for another 3 days, but we've dived the range trend, we've hit the front side. So somewhere in the next 3 days, you'd be expecting this to move back up over 110.972. So these are the reasons why I started layering in, because we might get some little ups and downs in this movement. Now that would also, when that candle closes, or before that candle closes, it's going to want to go back and try to bungee cord back to that range trend, which is up around 112. So yeah, so there's a bit too much going on the lower time frame for this to really regress into a really big dump in the short term. But let's have a look at some of the bigger stuff. So 5-day, don't worry about that. Okay, so the weekly has possibly tapped the really old range trend from November. So that's a pretty good support to hit. Just check that out on a lower time frame. It's pretty close. Maybe it hasn't quite hit it. Okay, so it hasn't quite hit it, but it's very, very close. So if we were to get a move down to the weekly origin breakout level to retest it, that'd be a move to 108.350. So that's kind of that area I was thinking. And then we'd be pushing through the range trend at the same time. So hitting that on the other side of the range trend should definitely bring us back up. We've got a bit of time on the weekly, so 79-day close today. So this is important from one perspective, and that's that we don't really want to go below this trend, which funnily enough is that same number, about 108, 108.049. So that could be why they're just sort of hovering here. Maybe they don't want this candle to be on the wrong side of that trend on Bitcoin. But you have to be prepared that if it is, then what will happen is you'll get some kind of interaction between that 93.570 level and that trend. So up and then down, or down and then up. But it's that's why some of these sub-100 targets, they are legit, they're real, and the price is sitting very, very close to actually potentially bringing them into the scope. So yeah, you want to sort of see BTC close above 108 to be safe. This candle. So yeah, you really want to see it close above 108 today. That really low time frame. Yeah, 108. So we want to close over 108 today. Otherwise, you could definitely be bringing 93.570 into the scope. So right, let's have a look at SOL. Yeah, so SOL is sitting on a daily range trend. It's deviated this range trend once before. Where the price currently sits, it's going to open on the wrong side of that, so that could lead to further downside. We'd want to be closing above about 186 or 187, definitely above there, preferably up a little bit more so the candle's nice and clear above it. But yeah, you really want to be closing, also because you've got this interior trend that's coming through. So to make sure you're in a good closed position over both trends, you really want to be up in that 188, 189 area. Otherwise, that should bring our next levels into play, which I think are roughly around 179. Okay, let's have a look at the. Oh, and if we do close up above that trend, we're probably just going to target anything from the fib retracement of this candle here, which is going to be about 193, through to the back side of that hold, because we haven't actually broken the daily range. So in fact, we can go to 179 and we haven't even broken the daily range. So based on that, 204 would be the trend target that it would aim for. So, but it'd be good to see that go up a little bit. Otherwise, what it's probably going to do is have one final dive. That dive could be a deviation, because if it goes back up before the end of tomorrow, then it doesn't hard close it. The common theme here is that things can get really messy if some of this stuff doesn't go back up by the end of tomorrow. So we'll look at our 2-day. So 2 days still got a day on it. Same sort of thing. It's on trend now. It should be looking to bounce back up, but it's got a day, so it could come down, hit the lower levels, then go up. But you really want to see it go up. The 3-day close today. So we rejected off the break level, we rejected off the range trend. We've come back, we've pushed into the hold level. So realistically, the place for this to go is the trend, which it still has. It's still holding trend. That's around 170, 180, somewhere in this area in here. And it has hard closed the previous break level at 177, so that'd be support now. It's already bounced off at once to attack the trend. So yeah, we're sort of playing the game in there. And some of the stuff is so close to being able to just really move. You know, once we get over the, we hit that 213 level, that 3-week level. So we'll see how that's looking later. Once we get over that rejection, this thing has really got the ability to start cranking up. Wait, this chart, that's level. Okay. So 4-day doesn't close for another 3 days. So it's pretty irrelevant. It's in support. It'll probably go back up. It's come from the other side of trend, so it should probably go back up within the next 4 days. Telling us. Now 1 week. So rejection was from the 1 week trend, and we're heading back. We will see the 1 week trend. That's lower time frame trend. So it's down here somewhere around 180. Let's delete those. Where's our trend? There's our trend. Okay, so that's got really good confluence with the 4-hour hold level. So weekly trend and 4-hour hold level both kick in at about 184, 183. So that's looking fine on the weekly at the moment. As long as we don't lose that 179 sort of area on the weekly, we're pretty good. And this is the 3-week move. So what it's bounced off right here at 186-ish is the 3-week range trend from May of 24 through to July of 24. So we've bounced off this thing before, and it took us to 295. So this is definitely just a possible area price could bounce. And you may never see those lower levels. So we could just travel up from here. It's not a very sustainable place to travel up from, because we're on the wrong side of things like the 3-week range trend from 2021. But if it was to bounce from here, it could go back up to 214 and then just have another joke rejection again while everyone chases it. That's why markets are nasty. If you see some of my posts lately, it's they'll go up, they'll get everybody all hyped up, and then they'll just get everybody chasing along, and then they'll just dive straight through everyone's liquidations and wipe them out. So yeah, we're down on that range trend right now. If we stay above this range trend, then yeah, we can go back up. It's a 3-week candle. It's got 20 days though, so it can keep going down. We've also got another 3-week range trend coming through here at 182, which dates all the way back to 2022. So that one is the range trend that actually supported most of the price action from December of 2023 all the way up until it was lost in February of 25. Or March of 25, I think we officially hard closed it. Then it became the rejection that we went through in May. And as you can see, the rejection got recovered by the one that was created in May of 23. So you sort of see how price moves between these things. So the fact that we're now up above one again means we can aim for something higher. So right. So and we do have a 79-day close today. Just absolute hopium, but if the price magically pulls up above 201.876, then that's awesome. We will be back. We will have recaptured the 79-day trend, and if we do that, hey, the first resistance is 246.2, so we recapture that, yay. And if we don't, which is my bet, I don't think we're gonna magically run up above 200 in an hour and 52 minutes. Then the other side of it is we're looking to stay above 175, because staying above 175 means we're actually poking our head up above the downtrend, and that's a start. Right? If you can be above downtrends, then you can definitely break into upwards price action. So yep, so that's it for today. And like and subscribe. Hopefully those levels help you make some choices in some way. And I'm laddering into longs from now, just bigger portfolio stuff. And we'll just keep laddering in at key levels as it goes down. And I don't think this is the end of days yet, but be prepared. Some of the levels that I'm looking at to ladder in are in the 90s on Bitcoin, and they are in the 50s on Solana. So just we'll see how we go from there. And, yeah, take care, trade well, stay safe, all that stuff. Cheers, bye.